Good morning and welcome to the Energy Prospectus Group webinar hosted by Nouveau Monde Graphite. This event will be recorded. During the presentation, all participants will be muted. If you have any questions you would like to ask the speaker, please type them into the chat feature. We will read and answer questions at the end of the presentation. Thank you so much for joining us today. Now here is Dan Steffens, who will introduce today's speaker.
Hi, everybody, and Happy New Year to all of you. We're off to a good start. The energy stocks that I follow are all up pretty big in this first week of trading. So our speaker today is Eric Desailliers. He is the founder, president, and chief executive officer of Nouveau Monde Graphite, and it's one of my top picks for those of you wanting to invest in green energy. Eric is a professional geologist with a specialization in geophysics and integrated 3D earth modeling. I met him 3 years ago, and I could tell right away that he had the drive and the leadership skills to make his company successful. In 2015, Eric's team discovered the world-class graphic resource in Quebec that he's going to discuss today. Now, no matter how you feel about the Green New Deal, global demand for energy is growing. It is relentlessly growing by 2 or 3% every year, and we must find new sources of energy. Over the next 10 years, the world's energy provided by oil, gas, and coal will need to decline from over 80% of the energy supplied today to 70%. And coal is going to be the hardest hit of those hydrocarbon-based energy sources. The energy gap must be filled by something. Today, it seems like wind and solar will fill the gap. Wind and solar produce electricity. For electricity to become a larger share of the energy used for transportation, we need a lot more rechargeable batteries. And I mean a lot more rechargeable batteries. And we need batteries that recharge faster and hold more energy. My focus has been to find the undiscovered small caps that are going to produce the minerals needed for rechargeable batteries, and how to make those batteries recharge faster and hold more energy, and also to increase the range of electric vehicles. Graphite is an element that is critical to the growing lithium ion and fuel cell markets. Eric's company is developing what should become the largest high quality graphite mine in North America. Since hosting our first ever webinar back on July 29th, just 6 months ago, Nouveau Monde Graphite stock price is up over 500%. I think I could edit that to over 600% as of today. I think Eric's presentation will convince you that it has a lot more upside for us. So take it away, Eric.
Super. Thanks a lot, Dan. It's very interesting, and I'm really glad to talk to you about something we spoke before. And when you talk about coal, you talk about hydrocarbon. It's funny enough that the new economy will talk to you today about another form of carbon. It used to be hydrocarbon in the ground, but it cooked for millions of years at 3,000 degrees Celsius. And now this hydrocarbon became coal, and now it's now graphite in the ground. And we can use this graphite today in the new economy and make energy with it. And that's what we'll talk about. So my company, I started it in 2012, brought it public 2013. We discovered the deposit 2015. I'm the founder of the company. We went all the way from grassroots exploration, and we're very happy about 2021, where we have a construction-ready project, actually 2 projects, and we'll talk to you about that. It's quite exciting time for us. Finally, the market is getting that we are going into the EV revolution, and that's what we'll talk about, why graphite is so important in this revolution to happen. So yeah, I will be making forward-looking statement. I will do my best to explain what is our mindset, what we are building. So obviously, I will be making forward-looking statements. So in Nouveau Monde Graphite, we have 2 projects. We are a fully vertically integrated, the only one outside China, with the mining project on the Matawini project, 2 hours north of Montreal, and a transformation project in Bécancour, 2 hours northeast of Montreal on the shore of the St. Lawrence River. And we'll talk about those 2 projects. We're developing a fully carbon neutral anode material product for the lithium ion battery market. So we're going all the way from the rock to the customer, and you can name it, to the lithium ion battery customers. So our business model, obviously, we are developing a green circular economy. ESG is super important for us. It is super important for our customer. It is super important for the new investors, impact investors, ESG funds. We are at the forefront of mining for those customers who are making an electric car, and now the new people buying electric car, there's reason to do that. You know, they want it to be green. So obviously we won't do the battery, but we are doing an all-electric mine using hydroelectricity here in Quebec. We're transforming it into flake graphite in our concentrator nearby in Matawini project. And we're also making an all-electric anode material transformation plant in Bécancour with the highest standard of not only environmental, but also social and governance. And, you know, just a sketch for people who knows a little bit the province of Quebec. So we are, you know, Montreal, you see the island. Our project, one of the big strengths is to be fully vertically integrated all the way from the mining here and 150 kilometers east in Bécancour. We are doing the second transformation on the shore of the St. Lawrence River. And it's a great location thanks to the access to the European market opening east on the Atlantic Ocean, and also on the US market with railway and all the infrastructure needed to be successful developing a low-cost, large-scale project, all using clean hydropower that we have in excess here in the province of Quebec. So quick word about the market opportunity. So I just want to touch, you know, what is the impact of all what you hear about all the battery plant being built, what it will be the impact on the raw material. So, you know, when we were first time speaking then, I think in 2015 or maybe 2017, first time we spoke, the market was not where it is today. So now obviously the growth is obvious, it is moving. There's a lot of battery plants that are getting built. Actually, I just realized that I need to update my presentation. There's now 180 battery plants that are getting built up to 2019. And all those battery plants together, it's around 3 terawatt hour. So a few years ago, Tesla were alone in 2014 with a 35 gigawatt hour. And now we're roughly 1,000 times more, or a lot more battery plant, mega factory that are getting built on the planet. So what will be the, and this is without consideration with the newly revealed last fall Tesla Battery Day, they are forecasting themselves, their plan is to build another 3 terawatt hour. Why not? And you in Austin, Texas are really well positioned to take some of this growth, where they are building their first capacity that they will build the cells themselves. So obviously the market will be there. It's just our job to grasp and provide the battery material needed to make it happen. So firms like Benchmark Mineral Intelligence, a third party based in London, probably the most serious expert around monitoring the impact on battery materials. So in blue, what you see there is the impact on graphite. How much graphite is needed to fulfill the need of all those battery plants. And that's what you see, 2014, where 2024 actually, which is a very important date for us because that will be after 1 year, we'll be in full scale production. So graphite needed is just short of 2.5 million tons more needed of graphite. And we are, you know, Nouveau Monde Graphite developing the largest in the Western world project of graphite at 100,000 tons of graphite. So we need much more mineral project to be developed, financed, to be on time, to sustain this growth and make sure there's the smallest possible bottleneck to that growth, because all those battery plants will need to purchase graphite, you know, and a lot of it. So there's a lot of word about, you know, a lot of different chemistries, you know, for lithium-ion batteries. And we see companies like Tesla during the battery day doing a strategy of diversifying their procurement amongst the different cathode chemistry, LFP, NMC, NCA, and developing different ways to make sure there's no bottleneck on the cathode side for getting the minerals. The good thing is on the anode side, it's all graphite. Whatever chemistry you change, you take the 180 mega factories that are getting built today, they all use graphite in the anode with a little bit of silicon in some cases, and a growing content of silicon, you know, to improve the capacity of the battery without hurting the cycle life. But the thing to remember, it's all chemistry today of lithium ion that are getting developed at a big scale are using graphite in the anode. So we need minds like us to make it happen. And when we look at 2014 or 2017 to 2026, the supply and demand curve, like Benchmark Mineral is forecasting that by 2024, really the year where a lot of those battery plants will get commissioned, there will be a massive shortage of graphite that will obviously impact on the graphite price. So that's a very good timing. If there is one thing to remember from our presentation is we have developed relentlessly in the last few years our project to be ready for that year of 2024. Developing a mining project takes time. And I can tell you it's minimum 8 years. We discovered a deposit in 2015. It will be the full scale production in 2023. So we will have a head start amongst any other developer of graphite producing right at the right time, when the market will need it to put it in the car. So that's a very important point in mining. And today, where this is coming from, the transformed graphite all come from China. If there is natural graphite going in a lithium ion battery today, it all come from China. Flake graphite, the 2/3 come from China. There's one flake graphite production in North America is located near of our project. It's Imerys Graphite and Carbon, and they're shutting down their plant because it's fully depleted. They don't have any more. So there is a little bit of flake graphite produced everywhere, but the transformed material, 100% coming from China. And, their former President Trump, just during the election, actually signed this strategic executive order about strategic minerals and why we need to invest in this supply chain to develop it in North America. So that's really what we're doing, developing the largest project in the Western world to change a little bit this nonsense. We cannot rely 100% on China to provide us a minerals that is so strategic. And who's making money in China? Just one good comparable for us, it's the market leader today for graphite going in batteries. It's BTR. It's the only other company than us that they have a fully vertically integrated model. And they are very successful. They had a head start. Actually, it's a $3 billion market cap company. They produced in 2019 65,000 tons of anode material, 30% gross margin, great growth. So, that's a good example if you want to practice your Mandarin and try to translate their financial statement as we did and go on the Shanghai Exchange website, you will see this is, obviously it's 100% coming from China. So we need to look at the comparables over there. And in the Western world, so as I said, there is Imerys, but they are shutting down and they were not transforming their flake for the lithium ion battery market. There is a booming amount of lithium ion battery plants that are getting built. Maybe 25-30% of all the battery plants that I was mentioning before are in Europe and North America. And I can talk about all the different jurisdictions banning the ICE car by certain dates, but we will be there for 2 hours and I won't talk about our projects. So the thing is, what we have to offer to all those battery plants, it's a reliable, large-scale source of graphite that is carbon neutral, low cost, with great competitiveness with what BTR and the Chinese are providing, fully vertically integrated, all controlled in a very safe jurisdiction in Quebec. So that's very, very interesting. We're talking with all those battery makers as we speak. We have qualified in 2020, as we've announced, a few kilograms of product with them. Now our goal in 2021 is to qualify tons, thanks to our facilities that are getting built as we speak, and we'll touch about that. So the next step for us is to secure an anchor customer and start delivering the tons that those guys desperately need to make the revolution happen, I guess. So 2 projects, you remember, our main project that we are working since, since the discovery 2015 is the Matawini project, 2 hours north of Montreal. That's the mining project. I'm a very visual person, and usually I like to invite everyone to visit the project, but now with the pandemic, the border is shut and we cannot invite you to come visit, but I will try, to show you. So imagine we're 2 hours north of Montreal, great infrastructure, great labor force. About 3,000 people live there in Saint-Michel-des-Saints in this little community. We have built 2 years ago a stage 1 facility where we are producing today 1,000 tons of product since 2018. We have qualified with few dozen of customers that are purchasing flakes for different reasons, refractory bricks, foil for iPhone, lubricants. So we have a lot of fuel cells, hydrogen fuel cells. There's quite a lot of graphite in it. So we have qualified the flakes with a lot of customers. And the next step for us, we are receiving our permits in the next few weeks. And it's to start the construction activity of the stage 2. To be in full-scale production by 2023, so about 2 years construction time. So, so let's just 10 seconds there. So let's show you this little community. So that's the Matawini deposit, a very large deposit, 2.3 kilometers long, one of the largest in the world. That's where we'll build this industrial scale project, roughly $250 million US capex. And you see the proximity with the community. So we're using in this facility, the stage 1, it's an old oriented strand board facility, actually, that is still owned by Louisiana Pacific, but they are selling the plant. And that's the economics. In mining, we do a feasibility study with a very stringent requirement, 43101. So you see our project, it's all in US dollar now. So it's just short of $1 billion NPV project, the mining project itself, without consideration for the second transformation that we'll talk about, only the mining project and selling flakes that are not transformed yet in anode material. It's a very profitable business, thanks to the fact that we do have a very low cost structure with a very high quality product, very similar to the other mine that exists since 30 years in Quebec that I was mentioning, Imris. We are in the same geological setting, and we do have a lot of large flake, jumbo flake, very high purity just after a simple flotation process. So this is why we can claim to have a very good margin per ton. So that's, 26-year mine life, and that's the economics. And if you compare our economics with all the other projects, mainly in Africa, a little bit in North America, who did, a feasibility study like us, the big strength of the Matawini project is, as I said, the EBITDA per ton. We are in the first quartile of the lowest cost producer, but in graphite, quality is very important. So if everyone consider the same pricing assumptions for all the different products, we do have the best EBITDA per ton of all projects who did a feasibility study so far. Thanks to the fact of our deposit, obviously, I don't want to touch too much on our resource. So we just consider for the feasibility study a reserve of roughly 60 million tons, but we do have a resource that is more than double that. So we do have about over 5 million tons of graphite that is sitting in the ground, valued at $1,000 and over at $1,500 US. So you can see the value that is sitting in the ground that is ready for expansion plan should the market, need more than 100,000 tons at one point. So this is quite a large resource. And more importantly, especially in industrial minerals, is we are proving it since 2 years. The quality of the product, we're selling it to customers, and we have qualified, and we are ready to sell to those customers much larger quantities, and they're requiring it as we speak. So, and we have trained all our staff. We have showed the local community what the mine was all about. So this stage 1 plan was very transformative for our company to get into the production mode. So the Bécancour project, you remember the mine and the concentrator where we do the flake. And now we need to transform those flakes and make a ball with it. And that's what is used in lithium ion batteries. So there's 3 steps. It is purification, shaping of this flake, and coating to put a small carbon coating around it. So here you see the price I put. It's exactly the price that in the financial statements in 2019 of BTR, it was $6,800 US basket price for their anode material. It used to be much higher than that. Honestly, it used to be Hitachi selling this product at $15,000 when it was a niche commodity, you know, and now it becomes more a mass thing, and the Chinese got into the market, and BTR is having healthy margins at $6,800 US. That's the price we should use as a miner to make sure we are competitive and get into this market aggressively. So, and that margin we're doing in our economics, great margins as well. So when I was actually designing the second transformation project, actually it's close to 2 years ago, we needed to find an area where we can make this low cost, large scale, and have room to expand. That's why we choose Bécancour. Bécancour, we'll talk a little bit more about it. And there's a great partner that we've announced a few months ago. It's based actually in the US. It's the largest chloralkali producer in the world. In our purification process, we need to have chlorine. So this is one of our main, I would say, cost: electricity and raw materials coming from our mine and chemical supply. So chlorine for us is quite important, and also not only to buy it, but also to regenerate it and recycle it in our process. So actually, we've announced a few months ago a very important agreement, a lease agreement. That's the building you see there. That's where we are building our first commercial modules. So we're making, it's a modular approach. So we're building modules in the all-in facility in the Bécancour Park. And we have secured the land across the street from all-in to make, you know, a fully integrated chlorine supply and recycling process with these guys. So great agreement with a US-based company, you know, a very good partner for us to, you know, to help us the handling of chlorine. You don't do that in your garage, I can tell you. If you don't do that like this, a chlorine high temperature based process, you need to have the right people in place and the right structure and the right infrastructure. So Bécancour, it's a great location. So I have a small video, so hopefully it will stream properly for you guys. It's just 1.5 minutes, I think, or 2 minutes. So I think it's worth showing you what Bécancour is all about. And yeah, I will show you during the video. I will stop it at some point. So here there's a stop. So maybe I was, you know, I visited the first time the Bécancour Industrial Park. It was late summer 2019. I was just coming back from a trip actually in Texas with the Tesla and the family. We drove from Galveston to Louisiana. So most of you in Texas probably know better than myself what this is all about. But Galveston, on the shore up to the Louisiana state, you realize the scale of the oil and gas industry. All the, you know, Texas City and all those places that look like a lunar military base, you know, it's just massive scale, you know, and it made me think, if we want to be successful in the raw materials going to displace some of this massive market, we really need to find the proper location. You cannot just do that in the middle of nowhere. You need to have the infrastructure in place. So that's what we have in Bécancour. In Bécancour, there's a highway like that, exactly like coming from Texas City, driving to Louisiana on the shore that is open to the ocean. And that's where we imagine the project. We need to have the infrastructure in place. And here where you see in the background, the white silos and the white, that's all-in facility. And that's in 3D, our future transformation plant. And that's just what you see, it's about for 50,000 ton plant. So it's still small, it's still big in the graphite world, but it's still small in the displacement of oil world, you know, so it's still small, and we're the biggest in the Western world. So I just want to show you this Bécancour Park. It's the ideal location to upscale this business and make sure that we have all the electricity needed, all the chemicals needed, the railway, the scale is already there for our market to be developed in this industrial park. You see across the street, you saw quickly, it's an aluminum plant, one of the largest in North America. So just a quick stop here. That's all-in facility. You see, they used to have 2 electrolysis hall, and we are using their old one. So the one that you see there, that's where we're building all our first furnaces. So we have 2 that we're building now, and we have room to build 2 more. So we can make, you know, 1,500 tons per year, be profitable, prove our process, and, you know, have access to all infrastructure in terms of chlorine and electricity and everything. So, I mean, it's a great location and it's a great way for us to de-risk and start our project. So basically, All-In is purchasing salt and they split it into NaOH, caustic, and Cl2. So we're purchasing the Cl2 with high temperature to purify our graphite. And we are scrubbing it with the NaOH, and we're giving them back salt water with our impurities in it that they can handle on their site. And, you know, it's a closed loop. So this is quite interesting what we're doing with All-In and transformative. Good. So that's why we're actually doing the stage 1 of our transformation plan in All-In that you see in green. And across the street, we have secured a huge land to do the large scale transformation plan that we're planning to start construction in 2022, construction activities in 2022 on this land there that is, there's trees, but as I've showed you, we are planning to make some big improvement. And what it does, it's really a modular approach for the second transformation. And what is the earning power? So you remember our project, just short of $1 billion per ton, I mean $1 billion NPV for, and what it will do on the earnings if we do a 60,000 ton transformation plan, we add to our EBITDA about just short of actually 250, just north of $250 million on our EBITDA yearly. So that's the revenue, and that's, you know, just to give you the scale. So now we're planning to do about 40,000 ton a year in Bécancour, maybe it's 45 the right number. And we are planning also, we are looking for other location, potentially in the US, potentially in Europe. We're discussing with our different customers, and it is important for them to do some processing step the closest as possible to their battery plant. So we're in discussion with them to see where we can make a lot of 20,000 ton module spread in the world, not only all based at the same location. And you see those margins are based on exactly the product we're doing now that is, you know, very close to what the Chinese are doing. We're just doing it here with the way to do it in North America with the scale we're doing it here. But we're working as well with great American technology company that are just getting into that market, and they are applying their technology to this market very effectively. So we have a deal with a company named Forge Nano based in Colorado. They have great shareholders, including the Volkswagen Group, LG, and we have projects with them to add a very specific ALD coating around our anode material to improve performance and then, you know, obviously improve profitability and get a better price for the product. So this is quite an interesting agreement, win-win. These guys are licensing technologies and they are now working with us, the largest graphite player in the Western world. So great synergies with our partner at Forge Nano to deploy their technology to improve really the performance of this graphite going in lithium-ion batteries. So last few slides. So what we're doing at Nouveau Monde, 2023, full-scale production on the graphite flake concentrate. And also 2024, be ready to have a stage 2 facility that is up and running. In the meantime, we keep operating and running the phase 1 that we are doing at Saint-Michel-des-Saints, and the phase 1 at Bécancour will be up and running mid this year. So mid this year will be fully operational on our first 2 commercial scale furnaces at All-In's facility. And you know, I just put those timeline on the growth into the lithium-ion EV market. So you see on the Y scale, the battery demand increasing, and our project is really well timed with the market and take advantage. By 2023, 2024, the graphite price will soar because obviously there's not enough graphite for all those cars on the road, and we'll be there right on time for our shareholders to take advantage of this growth. So share structure quickly. It was actually 2 days ago, so I need to update it. So we're roughly in Canadian dollar 350, 2 days ago, 350 million market cap company, and a very strong supportive shareholder like the Pallingers Group. They did tremendous due diligence across the world for 2 years before doing 9 months of due diligence on our project. And now they are supporting us. They have invested quite a lot of capitals in the last 2 years. They have 20% of our shares alongside Quebec-based institutions like the Caisse de dépôt, but also the Quebec government financial arm like Investissement Québec. They do have 13% of our company. Caisse de dépôt, it's a $330 billion Canadian small pension fund, the largest we have here in Canada. So, I mean, we are well supported to get into the project financing discussion later this year. So quickly, last slide, Western world, most advanced, very well timed with the market, largest scale producer of flake and high purity battery grade graphite, fully vertically integrated. And that's what we have to offer to the market. A carbon neutral product, green and reliable alternative to the Chinese market in Canada, tier 1 mining jurisdiction with an abundance of hydropower and extremely supportive shareholder, de-risk project. Finally, now we're construction ready to do that in 2021. So that's it. I'm ready for all the questions you may have.
All right, Eric, can you hear me?
Yes, I can.
Okay, let's get into the questions here. And we have quite a few. They're pouring into the chat room. I don't know if you can see the chat deal, but I've got a few to start off with. Anyway, I looked at yesterday, the October 2018 feasibility study, and I see the mine itself has close to $1 billion of net present value. But that does not include the value you're adding with the purification process, correct?
This is correct. So yeah, so the mining project, there's a requirement 43101, and it needs to be made by third party. And we disclose, actually, we get naked to the market and to our competitor by disclosing our cost and disclosing everything. So it's great for our shareholders, but sometimes when you talk to customers, it's not the ideal situation. So
right.
So for the second transformation, this is different rules. It's an industrial project. So you're right. What is $1 billion US NPV project is only for the flake graphite, the Saint-Michel des Saints project.
What was the graphite price they were using in that feasibility study?
It was just north of 1,500 US. I think it's $1,532 per ton. US for price of graphite, and currently at our plant we sold few hundred tons coming from our phase 1 facility, and we are exactly at that price. So we're selling around 1,600, but we're selling more jumbo and large flakes, so it's skewing a little bit the results, but we're very close to what we have. And these price again are forecast. That's the difficulty in mining, and it's forecast. It's always forecast from a few years.
Yeah,
it's the forecast from Benchmark Mineral Intelligence, a third party, that the price will be like that in 2023, 2024 for the first 5 years of the project.
Yeah. What your balance sheet today? How much debt do you have today, and do you have the cash today to get the start developing the actual mine?
We do have debt. We have, I think, 12 million US of debt that is all to Pallinger's Group. So Pallinger's Group, they invested a lot in equity. They also have a debenture. Okay. So all that debt will be converted, obviously, when you look at our share price, they will convert it in shares, obviously, because it was a debenture. I think the conversion price is very low, like it's in the 20s.
Okay. When you open the mine on 2023, how many tons per day will it be produced the first year? And then how long will it take to ramp up to the 100,000 tons a year?
In our model, we do have a 6-month ramp up. So after commissioning is over, commissioning is 6 months. It's 18 months of construction, 6 months of commissioning. And after we have a 6-month ramp up. So 100,000 tons a year is roughly, I think, 275 tons a day. And but we're planning to have the first 6 months at a 50% capacity, and then we go to 100% capacity.
Okay. Okay. I'm getting into questions that were posted to the chat today. In the future, will I'm not pronouncing it, the Bécancour plant? I know you said it different than
Bécancour.
Me. Yeah, Bécancour plant only process graphite from your mine, or will they process graphite from other mines?
Yeah, so we do have a master plan. When you have a long-term shareholder like the Pallinger's Group and IQ, we are working a lot on our master plan and how we will follow the growth into that market. What we'll do in 5 years? What is our next move? Because we need to work on it right now. To consolidate our position as the largest and greatest in the Western world. So you're right. So the strategy is to build the Matawinie project at 100,000 tons a year, max out everything we can transform for that project in Bécancour, but we do have room to build more modules, as I said, in US, in the West Coast, and also in Europe. We do have a lot of demand in Europe, and we are, targeting some other deposit as well. And those locations are great to receive material. There's a port 1 kilometer from our land. So the reason for that location is indeed to be able to process graphite from a lot of other sources, because places like Africa, they do have a lot of graphite, but it's impossible to do the transformation. They don't have the electricity rate. They don't have the infrastructure to transform. They don't have all-in proximity and all that. So we are ready to absorb the flake graphite produced in Africa and just expand massively in Bécancour if needed. And we're looking for other locations. We have some discussion also in Europe for a great location with the same kind of setting that we have in Bécancour. But you're right, in our master plan, we will need to transform graphite from other sources, obviously.
Okay, that you answered another question that came in later then too, because I wanted to know where some of those purification modules were going to be put. Okay, what are your plans and timeline around a NASDAQ or more accessible exchange?
Yeah. You're right. It's we totally agree with you. We need to be in the US and be a reporting issuer in the US. If you look at 2 days ago, we did a great hiring, a great recruitment. We've recruited the chief legal officer David Toralbo, and he did that many times listing in the US, and he's a specialist in M&A as well. So I mean, his personal objective is to get this done as quick as possible. We want to, in 2021, apply and hopefully be accepted by a US major exchanges. That's what we're working on.
Yeah, and I know that's a big deal because some of the smaller Canadians that I follow, they trade on the Venture Exchange or TSX, but they only trade in the U.S. like on the pink sheets, and they have very low trading volume. I'll put in a limit order; it'll sit there for days before it gets filled. So your trading volume is very high. I noticed that.
But
go ahead.
If you would like to have more institutional, solid investors in the U.S. on top of all the retail and small funds that we have now, we need to get on the big door,
Yeah, I agree. Let's see. If solid state batteries, I guess, becomes a significant future battery technology, what might be the impact on the demand for graphite?
Yeah. Lithium-ion battery was invented in 1974 and was first commercialized by Sony in the 90s. And during all those decades, those years, all the researchers are working on solid state, they're working on silicon anode, they're working on a lot of different things to improve some of the aspect of the lithium-ion battery. And at the end of all those years of R&D, the only thing that's being commercialized today, 180 plant, as I said, it is the current lithium-ion chemistry that you see in a Tesla, for instance, that is graphite in the anode. There's a lot of very technical reason why this is like that. And for sure now there's a lot of money. Obviously, QuantumScape is a very successful R&D company developing an interesting technology, trying to have a breakthrough that no one had in the last 20 years. And maybe they will have a success, but even them, they are really candid when they do a presentation that it's not for the next few years before they will have some sort of pilot plan going and some sort of commercialization at a larger scale. So when you will start to see just one plant that will be solid state. So maybe at this time, Tesla announced in 2014 that they will make one huge plant for lithium-ion, and let's stop waiting for the miraculous technology and just put the current one in a car, and they proved their point, and it's working fantastic. And it will take 10 years before a mine like us in 2024 will make a lot of money selling into that market. So when solid state, there will be one manufacturer announced, maybe, I don't know, 2025, 2030, most probably 2030, count another 10 years before a mine like me will need to look into that. But solid state, it's lithium metal instead of graphite. But lithium metal, there's only 2,000 ton produced in the world, and it's about $50,000 per ton. So there will be, when you will see it in a jet or in a rocket, and NASA, that's the battery they choose. Next step will be to commercialize it and make it cheaper and make it massively attractive. But the party is just starting for graphite. So, I mean, we have at least a generation, and I think my kids will be selling graphite. So I mean, into lithium-ion battery. The real question then is when graphite will start to decrease in demand per year. And this is far away. I mean, even if QuantumScape one day will take 1%, 2%, 5% market share to the lithium-ion in 2030, 2035, today still the biggest market is lead-acid battery. It's not even lithium-ion battery. Still, even in a Tesla, there's a 12-volt lead-acid battery. So if you talk to a graphite player 5 years ago, they're selling graphite into alkaline battery, into lead-acid battery, and lithium-ion battery was not even that much considered on the producing company. So we need to think about when we'll be in production in a few years. In 2 years, we will sell massive amount of graphite to the lithium-ion battery market for a generation, for sure.
Yeah, I made a point at the beginning, and I present on some campuses and stuff, and it's people cannot comprehend the size of the energy, total energy used in this world. And I've been into business for 40 years, and there's been, you know, biofuels and this and that. And you hear about hydrogen now is going to replace everything. Let me tell you, folks, it ain't happening overnight. This is a massive scale, a massive scale industry on all phases. And we need every kind of energy because it's access to energy is what guarantees a great standard of living. And there's still a lot of this world that doesn't have a great standard of living, and they want it. So the demand for energy just keeps going up.
They want it. And sometimes then people compare this to a phone. It's, oh, you see the iPhone, it went quick. Yeah, but the phone, I can get rid of it in 2 years. Doesn't matter. But a car. So now we need to electrify 1 billion car to replace the ICE car on the road. And I think unanimously, all the automakers are deploying everything they have on their balance sheet to make it lithium ion. So, and people don't get rid of their car in 2 years, you know, they run it for 8 years. It's warranty 8 years now, the Tesla. So it's even more durable. So, I mean, it takes an insane lot of time to displace a market that is moving slowly like that. It took 10 years to Tesla before 2024. Well, when they will, you know, they're just 500,000 cars. Everyone is excited, but it's only 500,000 cars. Let's say 2024, 10 years after they have announced their first gigafactory, they will start to be a very meaningful million and over cars sold per year, you know, and start to displace a little bit of the oil and gas. And hopefully, hopefully for us, then the Africans, the Indians, all the developing countries will jump at technology, and they will have an electrified car right away instead of buying an ICE car. Well, hopefully for me, maybe not for you. It depends where your investment is still in oil and gas.
No, I invest in all energy. If I find one that I think is going to make money, I don't care what it is, even though my background is all oil and gas. But anyway, here's a good question. What are your plans about securing more capital? Do you think you're going to have to issue more shares? I guess.
Sure,
and then,
yeah. No,
okay, go ahead.
It would be insane for us to make 100 of our project financing only in debt. We need to have a healthy structure where there will be debt, but there will be equity, obviously. And it is our plan to include this capital raise into the IPO that we'll do on a foreign exchange. So to do the capital raise like that, we have a lot of institutions that were talking in the US and Europe that were before they were like oil and gas funds, and now they have billions of dollars that they need to deploy in the energy transition instead of oil and gas. But we need to be listed in the US. So we're really happy and confident that when we will make this IPO, this move, we can make a very healthy capital raise without hurting our shareholder. I mean, in terms of financing risk, and finance those projects. It's not massively capex intensive. You know, it's not like $1 billion capex. It is in the hundreds. You know.
Mm-hmm. Yeah, and the second part of this question: are you going to wait till your NASDAQ listing? And apparently, that is yes.
Yeah, for substantial for the project financing, yeah, that's the
okay.
You talked to me about that 8th of January. This is our goal. It's to do the project financing when we'll be on a major exchange. Yeah.
Okay, can you discuss the innovative use of electric mining equipment and broader plans to achieve a carbon neutrality in mining and refining operations?
Yeah, so refining for us is easy because it's all hydroelectricity, and we add, I think, one propane-based dryer, and we change it for electricity. So the concentrator was easy to make all electric. You're right, the mining fleet is the challenge, and I would say the only challenge is the cost per kilowatt hour of the battery pack. Today, we are at cost parity in terms of cost of ownership of the mining equipment that is being offered to us. Because because of the CapEx cost of the battery pack. So Tesla is now at $100 per kilowatt hour, but you can imagine that a mining truck, a battery pack, there's much more, like when you receive a 9G of rock, the battery pack needs to sustain that. It needs to sustain constant cycling, high power and all that. So it's more in the range of $500 per kilowatt hour. And the more company like us demanding those equipment and those type of battery pack, we will lower the cost. And that's why we are very open with all the market, all the work we've done in the last 3 years to be developing this electric mining fleet. We're opening up and we are in an open bid process as we speak, and all our technical documents are available for anyone who needs a 60 tons electric truck. We're converting ourselves one truck with a Western Star Daimler 40 tonners that we're converting with experts in Quebec with a grant from the provincial and federal governments. So, I mean, we're doing everything we can to make it happen, and this is happening. There's all the OEMs are working on deploying an electric fleet. And the OPEX is so much better. For us in Quebec at 3 cents US per kilowatt hour hydroelectricity, and we are, you saw the video, we're right, the hydroelectricity is right on site already. So for us, we would be fool to not develop an all-electric mining fleet when there's 1 ton of graphite in every freaking equipment. And we have already one of the cheapest and greenest source of energy available on site. So, I mean, we're really happy to do that. And our government is very helpful in grants and in supports. And it's not rocket science. I mean, there's already trucks available. We just need more people to demand for it.
Mm-hmm. Let's see. We've got a lot of questions here. We already got about 10 more minutes, so let's get to a few of these. Okay. Can you discuss the agreement that you have with the native Manawan?
In Manawan, yeah. So, yeah. So, I mean, we're working with the Atikamekw Nation since 2013, and this is super important. When you do mining, you have a very, very important responsibility to do everything right. You know, you're taking rock as a non-renewable resource in a local community, and you're playing with the landscape. So social acceptability and making everything right is super important for us since day one. As you saw, we are located in the municipality limit of Saint-Michel-des-Saints. It's an 1861 funded city, so relatively old city for North America. But 80 kilometers north, there's a nation, the Atikamekw Nation. And this is part of the land that they are claiming, and they are saying this their ancestral territory. So we're working with them since 7 years. We're offering them a training program. We've hired a lot of them. Actually, the access road going to our project is developed by an Atikamekw entrepreneur firm, Wemok, great people, and they're working well. So they are a happy shareholder. They have in the million shares, over 1 million shares. So, I mean, they are a happy shareholder now. And this is what we need to do, Dan. I can tell you, I don't know in the US, I've read a little bit in the US, it's the same here. The white and the European were not very nice with the First Nations since 400, 500 years. And you cannot blame First Nation to have a trust problem with white people like me, even if I'm going for 7 years there all the time, including them to our project. And even if our government, you know, doing everything they can, it's been a few years that the mindset here, it's becoming, well, we need to integrate, we need to work with the First Nation. So that's really what we do. That's what we want to do, but we need negotiation, and we need to involve also our other partners like the Quebec government, because if you read the press release they have made, they really support our project, but they want the most benefit possible for the community, and you cannot blame them. We need to make this happen, and we're supporting them to make this, and we'll have an agreement with the Atikamekw Nation. This is a so much important project it's a vector to improve the local economy, and we want to integrate them, and we're giving everything we can, but there's a limit. You know, we need to stay profitable, and we need to make a fair agreement for everyone. So I mean, it's a great, and I know they will support our project. They are, and we have already 2 agreements with them, a pre-development agreement and a framework agreement, and now we're negotiating the next one for the next 25 years. So we can take a few weeks to make it right, you know, with our other partners in the project as well.
Okay. There's a follow-up question that said, is the expected truck traffic created between the mine and the plant, is that going to be a problem? Is anybody complaining about that?
They would, but they won't, because we're building the concentrator like at the mining site. Okay. So it will be only concentrate, flake concentrate that will go out of the site, and it's only, I think, 15 trucks per day. It's nothing.
Okay. It said, will existing shareholders have a chance to buy shares directly from the company? Like, are these flow-through shares? Are they going to be able to have their money go directly in the company? No.
No more flow-through shares, because in Canada, this is a tax incentive. We need to do exploration work to be able to issue flow-through shares, and we give our tax credit to the shareholder. You cannot participate into that, Dan. In the US, it's only for Canadians. But okay. We are not issuing any more flow-through shares. We're far after that, you know.
Okay, let's see. Trying to see that we've addressed a lot of these. There's one question that says, have you had a discussion with Kathy Woods at the ARK Fund? She's an ARK Fund analyst. And if you have, can you discuss it?
Maybe I had a discussion in my dream, but I won't discuss it.
Okay.
Because I really like what she's doing. Now that she's successful with Tesla and all their problems, you know.
I think you answered this question. He says, you know, graphite's a commodity, and like all commodity, there's the danger that, you know, there's overproduction and it decreases the supply. I mean, you know more than anybody that there aren't that many high quality graphite deposits in the world right now. So anyway, it's always a fear, I guess. Let's see. What's the number one risk that you are facing? Like if some new kind of battery comes up or whatever, I guess that's what they're talking about.
Yeah, but I mean, at different time in the history of Nouveau Monde, the number one risk is changing, you know. Now that we have, I think we've did a great job with social acceptability of our project and designing a project that is very good. We have hired the best experts in terms of engineering and developing this. We have made a demonstration plan. We have sold our product, qualified. So now today, what is my biggest risk is probably the biggest risk of all major projects, is making sure my team is delivering, and myself delivering on time, on budget, the quality needed this project. You know, deploying hundreds of $millions, not like deploying going to the grocery store. We need to properly plan that and execute and deliver our promises. And that's really, at this point in time, this is now becoming my number one risk. Okay, it's not everything else. I think we manage it very good. The market's there. We need to deliver on time to our customer to make sure this is happening, and to our shareholder at the right price and at the right execution. Execution is my number one risk, as any major project should say. You know,
I can tell you from my days at Hess that what this reminds me of these deep water oil and gas projects in the Gulf of Mexico. You make a discovery, and it's 6 or 8, 10 years before you set your production platform. And you don't really know what the price of oil and gas is going to be when you bring it online. And that can work both ways. We had a very questionable project in 600 feet of water. And when the month before we brought it online, the price of oil doubled. So it turned a marginal project into an outstanding project. So you never know. That goes both ways. So we'll kind of end it here then. There's a few more questions. I'll put them all, type them on something and send it over to the company. I want to thank everybody that participated. And I also want to invite any of you, if you're interested in becoming a member of Energy Prospectus Group, this is what we do. My mission, and I've been doing this since 2006, I'm looking for those diamond in the roughs, undervalued companies that have this kind of potential. And, you know, right now the energy sector, especially oil and gas, has been, you know, kind of off limits to everybody. It's the smallest percentage, but this week, we've already seen a lot more money rotate into energy, which, you know, probably has been, you know, left out of the mix on the Wall Street gang. But again, this world's going to need a lot of energy, and we're going to need every possible source of it going forward if we want to improve the standard of living on this planet. Thank you again, Eric, and we'll be in touch.
Thanks, Dan. Fantastic. Thank you very much. I'm pleased to come when you will feel the needs for an update.
Okay. Thank you very much.